You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest. Repeat offender on Ron Siegel Radio, Mary Gaston, Realty Pro 100. Welcome.
Good morning.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And, of course, we're celebrating today, but, of course, I didn't get the screen set up properly, so I'm going to just have to wing it and figure out. Let's see, after doing all these years with Josh, do you think I can figure out what the items are that he thinks we're celebrating and then what I opine about? Let's see if we can get him on here and put it up. Let's see, today, Popeye the Sailor Man Day? No. I don't think we've got that one going today. National Classy Day.
It is what it is.
Let's see what else we've got going on. Why my screen just popped on me? So that doesn't help. National Hot Buttered Rum Day. Okay, yeah, I figured Josh has that one for me. Hot buttered rum. After spending the weekend in Paso Robles, I think my liver needs a break, though. And it is also National Bootleggers Day. Bootleggers Day. Okay. Let's see what the markets are doing. Can't we just go and get some good wine? I'm not sure about Bootleggers Day. Although we did do a bit of damage on Fireball. And being that it's cold out, wine is good, but hot chocolate with peppermint schnapps. Just throw that out. Have you ever had that one?
Sounds good.
Girl Scout cookie. Tastes just like a Girl Scout cookie. Hot chocolate, peppermint schnapps. There, it works. Let's take a look. The Dow Jones Industrial Average down 45.72. The NASDAQ is down 28. I'm sorry, the S&P 500 is down 28. The NASDAQ is down 133 points. Ow! Oil is down 69 cents a barrel. And let's see what the 10-year Treasury. It's coming back a little bit. It's at 4.1. It was up quite a bit higher than that earlier in the session. So coming back down there, that's good news. It was I think it was close to 4.4 early in the morning today. Yes, I have no life, so I was watching it then. Let's see what else is going on. Why is that happening? We'll take a look at that. We've also got gas prices. Do we want to look at gas prices? 453, 454 here in the formerly Golden State. Arian over there, my loan assistant, is paying $2.67 a gallon. $2.67. Of course, you got to be in Mississippi for that. $2.60. They don't have as much. Not as much taxes, not as much fees. But Josh, you're at $3.80, so still not bad. I'll have to fill up my car when I go out there next month. Let's see what else is going on in the world. What's driving all these markets? And we'll talk in depth about that in the Mortgage Minute. But it's kind of a fake sign that we're seeing right now. We had some real good retail sales numbers for the month of December. Good numbers in retail sales. Why do I say it's a fake sign? Well, our credit cards, they're maxed out. Over $1 trillion in credit card debt. We know that. But here's the issue. We've got these buy now, pay later programs. Buy now, pay later. They do not show up on your credit report until they go to collection. Just throw that out there. We've got the student loans having to be repaid now. But surprise anybody? Should I tell anybody there's a surprise here?
Surprise, surprise, surprise.
Latest from the government is they're not going to report those as being late. They're going to give you about a year to start making those payments. Or at least not report them as late. They're due now, but they're not going to report them as late for about a year. So do you think there's a lot of people that are making those payments? Why do you think our friend Chris Corrales' business is growing crazy right now? And again, remember, don't convert your government student loans into a private student loan. That would be the dumbest mistake you can make. There are 11 different programs out there that will allow you to minimize your student loan payment, and they're legal. Not the ones the president talks about that the Supreme Court has already said is illegal. So if you go to rsrstudentloanhelp.com, rsrstudentloanhelp.com, you'll be able to see what your student loan payment could be if you go through that service. And again, it's nothing to do with me. It's just a service out there that we find is a good program. Now, Chris Corrales, his service, he's basically going and renegotiating with your creditors where they may have changed your interest rate to 30%, and I'm seeing a lot of those right now, 30% interest rates. Well, they might renegotiate those down into something that's a little bit more favorable, a little bit more fair. And talk about fair. Just look and see how much money the banks are making right now. They came out with their earnings reports. Big time. They're making a boatload of money because they've increased the interest rate so much. Now, why are they doing that? Because they know they're going to have defaults. When those defaults start coming, okay, that's going to hurt the banks. Why? Not only is it that they're not getting paid, but the other part of that is they have to increase their reserves when they start having those defaults. Big time problem for them. So why would that be good to talk to Chris Corrales? Why would the banks want to have you work with Chris Corrales? Because even though he's reducing your payments, reducing your interest rates, well, it's a performing loan. So it does work out better for the bank. It works out better for you. It works out better for everybody. And his fees are all included. He charges nothing if he doesn't solve your problem. How much better does it get than that? If you want me to put you in touch with Chris, give me a call, 800-306-1990, 800-306-1990. We also have set up a new little website or a landing page for you that you can see if a debt consolidation might work. rsrnodebt.com, rsrnodebt.com. You can actually go through there, answer a few questions, and it'll give you an idea. Maybe there's a benefit to you there. rsrnodebt.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, why you may want to seriously consider a newly built home. We'll talk about that. Can you really get a 2% interest rate right now, 2.006 effective APR today, 30-year loan? Yeah, we'll talk about that. And we're going to have the Millennial and the Old Man. If you're watching us on RonSiegelRadio.tv, any of the socials, or ABC News and Talk AM 1490 video feed, you can tell which is the Millennial, which is the Old Man. It's pretty simple. We're going to talk about the monthly market report as we do each month and get insights from the generations. You can reach me anytime. Off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Hey there, friends. Wondering if now is the right time to buy a home? Or are you waiting for a bunch of foreclosures? The facts speak loud and clear. Defaults and foreclosures are down, sure. We might be headed towards a recession. But did you know interest rates typically drop and real estate values often go up during a recession? So what are you waiting for? Higher prices or higher payments? Don't navigate these waters alone. Connect with RonSiegelRadio.com today. That's RonSiegelRadio.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. If you're watching us live, let us know you're there. Just say hello. And you go to StreamYard.com/Facebook. That'll help us know that you're there, and it'll also let the algorithms know to share our broadcasts with more people. I downloaded something. I'm gonna have to send it to Josh because I am an old man and I don't know exactly how to interpret it. But it said in the last 28 days we had 22 million people saw our stuff on social channels. 22 million people. As well, if I interpret it correctly. Dave, glad to see you here. Mitchell, glad you're with us. Glad to have you putting that in there. Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. 30-year conforming loan, 6.605. That was yesterday's lock, up a little bit. 30-year jumbo loan, 7.229. That was up quite a bit. That's the jumbos. 30-year FHA was up 6.455. 30-year USDA, 6.411. And the best loan on the market, that would be the 30-year VA loan, 6.237. Clean sweep. Every one of them were up yesterday. And if you want our market commentary, our thoughts from the day, hello from Paso Robles. Love it. We were just there and had a great time. If you want our market update, rsrmarketminute.com, rsrmarketminute.com. Yeah, let's see what's going on today. The 10-year Treasury is up 3 basis points. That's come back quite a bit. Mortgage-backed securities are down 15 basis points. That means interest rates are up again today. That was up a lot more earlier in the day. Why is all of this happening? Fed Governor Waller, he made comments yesterday. Always a voting member, Waller said that he's becoming more confident that the Fed is within striking distance of achieving a sustainable level of 2% PCE inflation, but he needs more data confirmation that inflation is moving down sustainability before cutting rates. He thinks the Fed will cut 3 times this year in line with Fed's December meeting projections. But the economy keeps wanting to say that we're going to do more than that. We're going to do 6 or 7 times this year. The bond market did not like this comment as it's pricing in a 61% chance of a 25 basis point cut at the March meeting. There will be no cut at the March meeting. I'm just going to tell you that. And there's a lot of reasons why, but there will be no cut at the March meeting. Just mark my words. Retail sales in December rose 0.6%. Stronger than the 0.4% expected. When stripping out automobiles, sales were up 0.4%, which was double estimates. Core retail sales rose by 0.8%, 4 times the estimate of the 0.2%. Put pressure on the bonds because that's what gets put into GDP. When the core sales are going up like that and the consumer is 70% of GDP, not going to see a recession. That's just the way the math works. Hard to separate what was helped by the buy now, pay later. And we'll see in a few weeks the extent of credit card usage that was needed to sustain this level of spending, as November saw the biggest 1-month increase in revolving credit outstanding since March of 2022. Important because the savings rates is only 4.1%. When people spend more on credit, that means they're pulling future spending back to today, because eventually you got to pay that bill. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva is the place to go. 800-306-1990, 800-306-1990. And yes, they are the only one with the Home Select product, at proprietary product, and that's the one that I was sharing with you a couple days ago. 30-year loan, the APR on it, the effective APR, 2.006. Not for everybody, but if you want to pay, and that one there was a 30-year loan that just by doing nothing different, no traditional mortgage payment, the loan paid off in 7.25 years. 30-year loan paid off in 7.25 years, no change in your mortgage payment, and a 2.006 effective APR. What do you think about that one? So let's chat. We're going to look at every month we look at what comes out from our friends over at Keeping Current, and we like to chat about what their data is, and we get a totally different perspective. Mary Gaston, Realty Pro 100, comes in and shares the thoughts from the millennial world, although she acts a lot older than a millennial. Sorry, I don't know if that's good or bad, but
Old soul.
old soul. So maybe it's because of all the experience you have in the real estate world.
Yeah.
So, but she does bring us that insight, which is helpful. So this year, according to Keeping Current, it's going to be the year of the fives. Okay, so they're thinking that we're going to see a 5 handle, which is the first digit in interest rates, a 5.5 million in total home sales, and 5% appreciation on homes. What do you think?
I mean, honestly, I don't know.
I look at that and I say, something, 5.5 million homes, maybe, because that's a lot more than what we've been selling.
Mm-hmm.
5% appreciation means that's going to be going down from where we've been.
Mm-hmm.
And high, 5.99 or 5.01, either one is a 5 handle on interest rates. I'm not sure I see a 5 handle on interest rates either.
Yeah. I mean, it just sounds like they're predicting more of a normal market.
That's exactly what they say.
Mm-hmm.
Everything that they say in here talks about a normalization of the market. So the first thing let's talk about is the mortgage rates, a 5 handle on the mortgage rates. And some of the information that we get there, again, you hit the nail on the head there, Mary. Normal.
Mm-hmm.
Because when was the last time we had a normal interest rate?
I would say like 2019.
No.
No?
Probably be 2006, maybe.
Oh, well, that's before my time.
That's before, right? Well, because you look at a long-term history, and the long term is right around 7. I think it's like 7.18.
Yeah. See, well, my normal is like 5.
And that's the big issue right there, is because absolutely your normal is actually probably, I mean, other than the last year and a half, you never even saw a 5, did you? I mean, it was your 2s, 3s, 4s.
Yeah.
Right, because you figure going back to 2010, give or take, we were in the 3% range. We went all the way up to maybe 4.5, and then back down. Because I think the last numbers we looked at, I don't know, maybe they have it in these slides here today, but what is it, 70% of the population has a 4 or less?
Yeah, I guess that's true. Because when I really started paying attention to rates, back in 2016, 17, I think we were in the high 4s.
High 4s, yeah. So, you look at that and then you say, okay, well, high 4s for other than the millennials, that's not really the norm, right? So heading into the new year, mortgage rates remain on a downward trend. So we did get up to 8.03 at one point.
Ugh.
Yeah, that's exactly it. Yeah, that was kind of ugly. But would I just come up with or report that we're not 6.60? Now, the numbers that we get on these slides that we have, those numbers are actually coming from those numbers are actually coming from Fannie Mae, or Freddie Mac. Sorry. So the Freddie Mac numbers are what we look at. The number I just gave you of what I reported this morning was 6.605. That's coming from OBMMI, where they're giving us that data. So let's take a look at that. Heading into the new mortgage rates, again, on a downward trend. Not today, but going forward, those will be heading south. According to Dean Baker, senior economist, Center for Economic Research, it appears that mortgage rates are now falling again. They'll almost certainly not fall to pandemic lows, although we may soon see rates under 6%, which would be low by pre-Great Recession standards. What's going to drive them down another 1.5? It doesn't. There's 2 areas that I look at that we may be able to drive them down that far, and we'll get to them, I think, later in these slides. But you've got a wide margin between the 10-year Treasury and mortgage rates, wider than normal, and maybe we'll get 3 or 4 rate cuts from the Federal Reserve. Lawrence Yun, chief economist at NAR, a market turn can be expected as mortgage rates have plunged in recent weeks. which is fascinating when we talk about this, because you and I have listened to Steve Harney before.
Mhm.
And one of the things that especially the last time I listened to him do a live event, he was very animated about not forecasting interest rates. And then the first thing they put in here is interest rates. Right? And then his logic was great. He said, if Jay Powell can't forecast interest rates, how could we as laymen?
Mhm.
Makes sense, right?
Yeah.
Okay, let's look at 5.5 million total homes for sale. 78.7% of mortgage rates are less than 5%, which ties into what you and I were talking about a minute ago, right?
Mhm.
So under 3%, 22.6%, 3 to 4, 36.8, and 4 to 5, 19.3 are the interest rates out there right now. Logic is if you've got an interest rate under 4,
Mhm.
do you want to sell that?
No.
Right?
It makes it very uncomfortable.
Yeah. What's the cause for doing that? You know, there's no real catalyst to it.
Yeah, you have to like really be coming from like a need.
And you know, you've got the need and the inability to even borrow more,
Mhm.
right? Because you don't want to pay that off. I've told people, I'll get your opinion also. I tell people, if you've got an interest rate in the 2s and low 3s, never sell that.
Yeah.
I mean, you can make that in rental, lease it for better than that, can't you?
Mhm. Yeah.
I mean, you know more about the real estate side than I do. I'm just doing a little radio here, but just from math.
Mhm.
You look at this, Lance Lambert. We might be at peak lock-in effect. Some move-up or lifestyle sellers might be coming to terms with the fact that 3% and 4% mortgage rates are not returning anytime soon. If the lock-in effect eases up further in 2024, it could help boost existing home sales from the very low levels experienced at the end of 23. The lock-up effect is an interesting one
Mhm.
because I just talked about it. If you got an interest rate under 5, you're locked in.
Yeah.
Now, there are certain reasons why you'd unlock that door,
Yeah.
right? If you're getting divorced, I'm not sure that a 3% mortgage rate is going to keep you in the same house.
I don't know. It might.
Practicality. I mean,
Yeah.
it might be a good idea.
If
but
you're leading with, the logic and not the emotion.
yeah, there it is. I mean, if you're leading with the logic, the question is how many people are going to lead with logic there? Right? If you're in a studio condo
Mhm.
and you just got married and you're having babies, it might be a catalyst that 3% might not have as much impact.
Yeah.
But you can refinance or get a second mortgage
Mhm.
and buy a bigger house.
Absolutely.
Right? So you've got another opportunity there. So we're going to talk when we come back. There's reasons that buyers pause the decision of buying, but maybe now there's an opening for the seller side of it too. We're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. You can reach me anytime off air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. 2 reasons why today's mortgage rate trend is good for sellers. You've been holding off on selling your house to make a move because you felt mortgage rates were too high. Their recent downward trend, not the last day or two, is exciting news for you. Mortgage rates have descended since last October when they hit 7.79%. In fact, they've been below 7% for over a month now. If you're watching us on RonSiegelRadio.tv, any of the socials, or the ABC News and Talk AM 1490 video feed, you're actually seeing the chart from Freddie Mac. It's going to go up. It'll show up a little higher when the rates come out tomorrow, I guess it's already. So you're seeing that while they're not going back to the 3% we saw during the unicorn years, they are expected to continue to go down from where they are now in the near future. As Dean Baker, senior economist at the Center for Economic Research, explains, quote, it also appears that mortgage rates are now falling again. They will almost certainly not fall to pandemic lows, although we may soon see rates under 6%, which would be low by pre-Great Recession standards, unquote. Two reasons why the recent trend and the expectation will continue is such good news for you. You may not feel as locked into your current mortgage rate. With mortgage rates already significantly lower than they were just a few months ago, you may feel less locked in to the current mortgage rate you have on your house. When mortgage rates were higher, moving to a new home meant possibly trading in a low rate for one up near 8%. However, with rates dropping, the difference between your current mortgage rate and the new rate you'd be taking on isn't as big as it was. That makes moving more affordable than it was just a few months ago. Lance Lambert, founder of Resi Club, explains, we might be at a peak lock-in effect. Some move-up or lifestyle sellers might be coming to terms with the fact that 3 and 4% mortgage rates are not returning anytime soon, unquote. More buyers will be coming into the market, according to data from Bright MLS. The top reason buyers have been waiting to take the plunge into home ownership is high mortgage rates. Top 3 reasons: mortgage rates are that buyers paused. 72.1% are the mortgage rates. 34.4 inventory. 17.4 affordability. I would have thought affordability would be bigger than that. Lower mortgage rates means buyers can potentially save money on their home loans, making the prospect of purchasing a home more attractive and affordable. Now that rates are easing, more buyers are likely to feel they're ready to jump back into the market and make their move, and more buyers mean more demand for your house. Bottom line, if you've been waiting to sell because you don't want to take on a larger mortgage rate or you thought buyers weren't out there, the recent decline in mortgage rates may be your sign it's time to move. Give me a call at 800-306-1990. That's the Mortgage Minute, brought to you by rsrmoney.com. So let's think about that one, and before we get back into the slides and the information we got from Keeping Current, I want to talk about this one, Mary Gaston, Realty Pro 100. So let me ask you this thought, Mary. When we start seeing the interest rates come down, people get excited, and it increases their desire to take action, buy, sell, whatever they're looking to do. In the last few days, we've seen interest rates go back up. Do you think that brings in a fear of loss mentality? Did I miss the low rates already?
Maybe a little bit. I mean, I would say no. I think all the reports are still saying everything's going to be going down. So I don't think anybody's really worried
no fear
about
of missing out right now.
I would say no.
Okay. And I think I probably agree with you, but every once in a while we do find that if these rates stay here for the next month or so, then people are going to start saying, okay, well, maybe this is the norm.
Yeah.
And maybe it's time to just take action if that's what I need to do. Top 3 reasons buyers pause the decision. Again, 72.1% mortgage rates, 34.4 inventory, 17.4 affordability. Does that surprise you at all with that low number for the affordability side?
Well, I mean, it sort of almost goes hand in hand with mortgage rates. I feel like mortgage rates is what pushed a lot of the affordability out. But it says affordability / home prices, which 17% sitting on the sidelines because the home prices are too high. I mean, are they waiting for them to come down? Because that's like we need to educate them that they're not. Right,
that they're not going to come down. Well, most people look at affordability and wonder, okay, how do you get affordability? You're basically looking at 3 different things. It's the price of the property, the mortgage, the interest rates, and wages. So those are the 3 items that go into the affordability calculation. Wages aren't going up to meet inflation.
No.
So that doesn't help. Mortgage rates are up, and again with no inventory, that's going to keep prices up. So I don't know that
Mhm.
anybody. Are you still hearing people talking about the idea of looking for a drop in real estate values?
I haven't really heard it lately. No,
Good. At least we're finally the message is finally getting out there.
it's finally caught up.
Caught
a couple
up.
years later.
Yeah. We now forecast 3 consecutive 25 basis point cuts in March, May, and June to reset the policy rate from a level that Powell has recently taken to describing as quote, well into restrictive territory, unquote, rather than just restrictive. That's according to Goldman Sachs. There's some pretty bright people, and they're saying a March rate cut. Federal Reserve doesn't seem to be saying that, though.
Mhm.
I don't know. I don't think we're going to see a March rate cut.
Well, this did come out based on like last month's data, right? Maybe
Yeah.
just a little bit behind.
Yeah, maybe that could be. It could be. But, Chapman University, which usually has a better forecast than Goldman Sachs, I just throw that out there. They said that the rates are really going to stay in the 7s for this coming year. So that was a tough one. But we talked about this a little bit before. And this is an area that a lot of folks don't follow. I've got no life, so I follow this. Over 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury yield. Over 50 years, the average spread is 1.72. So what does that mean? It means if you go and look anywhere that you want to, you go to Market Watch or any place and find out what the 10-year U.S. Treasury is yielding on any given day. And it's always there, so you don't have to look too hard. It's not that difficult to find. So if you go to Market Watch and click on rates, 10-year Treasury right now is 4.095. Historically, that means you add 1.72, and that's what you would get as a 30-year fixed rate mortgage. Right now, you're having to add 2.78. So it's an full point extra. So just for round numbers, and then I'll do the math backwards. So 2.78, let's call that 3. And if I can get that market rate back up there, 4.09, add 3 is 7.09. Take a quarter off of that is 6.8. So kind of gives you an idea. So rates could be at 5.8 if we had the normal spread.
Mm-hmm.
Wow, that's going to be that. So they could be there already if it wasn't for that spread. We have to start looking, okay, why is that spread there?
Mm-hmm.
Interesting thought, right? So the spread is there because mortgage companies are believing everything that's being said, that the interest rates are coming down. And when they go to sell a loan, they collect about 80 basis points, 0.75% is where their profit comes from when they sell that loan to servicers. Well, the servicers figure they're going to get that money over the normal 5 years that people hold a loan. But if interest rates come down, do you think that people are going to hold them? No. So the servicers are basically saying, we're not going to pay that money for those right now because people aren't holding the loans. That's why you've got that spread. When the interest rates start stabilizing, that's when we'll see that spread stabilize as well. So new construction. Market currently requires a higher level of new construction inventory due to persistent lack of resale inventory. Newly built homes available for sale accounted for 31% of total homes available for sale in November, compared to an approximate 12% historical average, according to the National Association of Home Builders. So you recently bought new,
Mm-hmm.
and you've also bought resale.
Mm-hmm.
What were your thoughts about the two as far as comparing the experience, the move-in readiness, available, things that you had to do? Were there any surprises that you came across?
I mean, not really.
Okay.
No. I mean, no.
I know I looked at it when I was, late teens. My parents bought a new build, and I'll just remember them complaining about not anticipating all the extra costs.
Mm-hmm.
The landscaping, hardscaping, window coverings.
Yeah, you definitely have to keep that into account. And I would say, just if you're going to do a new build, just look into the builder. Look into the builder, because there's definitely differences in, how builders act and operate. My husband did a new build before we ever got engaged. Great experience with that one. Never had any issues. This newer builder, there's been issue after issue after issue with every single house.
So when you talk about issues, are you talking about the workmanship? Or
Absolutely,
okay.
yeah. The workmanship itself.
Okay. Now, how long have you been there?
A year.
A year. Okay. I'm going to throw this at you and just see. It's a trick question.
Mhm.
Maybe not. Did you happen to have a home inspection in
I
the
did
last
not.
month?
In the last month, no.
Okay. So, pro tip for you. If you're buying new, have a home inspection at about the 11-month mark. We've talked about this before. Have a home inspection at the 11-month mark. Why?
Because your warranty is about to expire, so you can put in all the requests.
Exactly. Yeah. So, and you probably found a bunch of requests.
Mhm. Yeah, I mean, I've been putting them in all year long.
Okay. But do you think you got them all?
Probably not.
Okay. So just a pro tip there, get that home inspection done. Probably cost you $500-$600. What does an inspection cost? Is it about $500 or $600?
I would say, yeah, about that.
Okay. So $500 or $600, spend the money because you may find some things that you didn't know about. And maybe 6 months from now, we'll ask Mary what if there were other things that she thinks an inspector may have found. We'll talk about it. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, 49-year average monthly price movement. We'll talk about that and more. You can reach me anytime off air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. As usual, we went a little long, and I'm talking too much. It's generally the way. Probably the only time of the day that I talk too much. I get a lot of people complain that I don't talk, but here on the radio, I guess maybe it's by 10 o'clock when we finish recording. I've used all my words for the day. But hey, the Your Credit Matters segment today, I'm going to switch it up, Josh. We're going to do Your Credit Matters, brought to you by rsrnodebt.com. Maybe I'm going to change that URL. Do you like rsrnodebt.com or rsrdebtfree.com?
Debt free.
Debt free. Okay, we'll just have to change that, Josh. rsrnodebt.com. You got a credit report, it's wrong. Want to get out of debt? rsrnodebt.com. That'll help you out. Let's get back to our discussion of the monthly market report. Mary Gaston, Realty Pro 100, is with us. The millennial and the old man. 49-year average monthly price movement. This is a fascinating chart if you're watching us on ronsiegelradio.tv, any of our socials, the ABC News and Talk AM 1490 video feed. And it basically shows that how the breakdown is of price appreciation throughout the year. And there's no real surprises there that April, May, and June are our highest months of appreciation throughout the year. Every month, the real estate values go up. April, May, and June are the biggest ones if you go from 1973 to 2022. Then you look at the 49-year average and compare it to 2023, and you say, okay, well, 2023, other than January, they're pretty much in line. And you know when the last time we had a normal, based on, if you call 49-year average normal, the last time we had a normal appreciation cycle, like 2007. Before you were in the real estate, environment, little before your time, I guess is the right word. But now let's take a look at it from the next step. And I love the home price expectation survey, just because I think that's a Fannie Mae product, but they actually look at home prices and they talk about the idea of, and they survey over 100 economists and business professionals, real estate professionals, bankers, the whole bit. And they talk about, put them all together and say, okay, what do they forecast the growth to be, the real estate, the price appreciation? And again, if you're watching us on ronsiegelradio.tv, you're seeing this chart, and this chart makes absolutely no sense to me. And I look at realtor.com. Now they've got a vested interest in real estate values going up.
Mm-hmm.
And they're forecasting a drop in real estate values of 2024 of 1.7%. Do you think they're drinking something?
Yeah, I don't see where they're getting that.
There's got to be a catalyst if you're going to have real estate values drop like that. Mortgage Bankers Association, on the other hand, they say up 4.1%. That's more normal, but the home price expectation survey says up 2.2. They were way off last year.
Were they?
Yeah, so you start looking at it and you say, okay, but any of these things, now remember, this is a national number. Here in Orange County, California, we average over the last 63 years at about 5.3%.
Mm-hmm.
Wouldn't surprise me to see that again.
Yeah.
Right, with no inventory. That's maybe I missed it. Have you seen a lot of inventory come on the market in the last week?
No.
No.
Mm-mm.
So you get to see that because in your office, what, 70 agents, 80 agents?
About, yeah.
Right. So you got that many agents. They're out there. So it's not a matter of people making a decision the first week of the year.
Mm-hmm.
They were talking to people, in November, December.
Yep.
Who said after the first year, let's talk.
Mm-hmm.
So, okay, Fannie Mae Home Price Expectation Survey produced in partnership with Pulsenomics, polls over 100 housing experts across industry and academia, forecast national home price. We talked about that. And Pulsenomics. Okay, so let's see the estimated home price performance for the next 5 years. So 2024, 2.35, 2025, 2.7, little light. 2026, 3.6, 2027, 4.06, 2028, 4.15. A lot of growth. I don't see nothing really. It helps lead us into the next piece of information,
mm-hmm.
which is household wealth, which you and I have talked about this before. The idea that, we've got like a 10-year plan or a 15-year plan
mm-hmm.
that you can pretty much retire.
Yep.
Buying real estate.
Yep.
And not selling it.
Mm-hmm.
Do you think that's still the case with a 6.5% or 7% interest rate environment?
I mean, it's still doable.
Okay. So buy it, hold it, refinance it,
mm-hmm.
and do it again. Rinse and repeat.
Yeah. I mean, it's harder, but it's doable.
Well, so should I wait to do it until interest rates drop?
I would never say wait. If you can do it now, do it now.
Best time to buy real estate was a year ago.
Yep.
Second best time is today.
Yep.
Right? Because you can't go back a year ago,
mm-hmm.
2 years ago, 10 years ago, right? I had I don't know tell me if I told you this already. I had an agent that came on and said he can tell you exactly when the best time to sell is. Did I ever tell you that one?
Mm-mm.
3,000 years from now.
Oh, yeah.
Right? Prices are going to be higher down the road. Right? Basically, all he was saying
mm-hmm.
is down the road, prices are going to be higher. I think I agree with that.
Yep.
Again, the year of fives, 5% will be the approximate home price appreciation. Case Shiller, they're looking at month-over-month percentages. We look at Freddie Mac, their month-over-month percentages. Percentage of annual home appreciation, 1980 to 2022. It's seasonally adjusted. I hate when they do that seasonally adjusted stuff. But there was only like 4 different years when real estate values dropped, going back from 1980 to 2022.
Yeah, and that was after the crash of 08.
Right. And so you think about that. Now, again, look at a 42-year average of appreciation, 4.92%. I don't think it's going to change.
Same.
I don't think I can't see a catalyst, for some change. Now, there are things that we can't forecast. I had this conversation with a friend of mine a couple hours ago. Yes, again, I have no life. Actually, it's 4 hours ago now. So we were talking, okay, what is going to, the Federal Reserve drops interest rates usually When they go up, sometimes they'll go half a point. When they go down, they go a quarter point.
Mhm.
Could they possibly drop a half a point in the coming year? And my comment was, I hope not. Even though interest rates help us, right? They help real estate, they help mortgage,
Mhm.
help a lot of ways. But what would the catalyst for a drop of a 0.5% means there's some major geopolitical event.
Mhm.
None of us want that,
No.
right? So, an escalation of the wars, those type of things, sometimes in the short term will bring down interest rates. Unfortunately, long term, wars are profitable. It's a shame,
Mhm.
but right, because you have to replenish all of the supplies and it's just not good. Mortgage rates dropping, demand for homes in early 2024 is likely to be strong and will again put pressure on prices. Similar to trends observed in early 2023, most markets will continue to reach new home price highs over the course of 2024. That's Selma Hepp, chief economist at CoreLogic. Again, still pushing the idea of new highs.
Yep.
Nothing's going to stop the real estate, I don't think.
No.
Not right now.
Nope.
Right? I mean, even a recession, we see real estate values increase during a recession.
Mm-hmm.
So that's not going to change anything. Question mark, I guess, right now becomes how much information do people really have about their property values?
Mm-hmm.
That's a question I would throw to you, Mary. What do you do when you're talking to people, when you're talking to consumers? Because I know you're involved in listing a couple properties here and there when you can,
Mm-hmm.
but you're in the leadership of a good sized company. Do people know the value of their property? Are they anywhere close?
Sometimes I think normally they've overinflated it a little bit, especially with how fast the last couple of years have been with the appreciation. I think the owners have inflated their value even more a little bit.
Now you can talk about it from two different standpoints. So you can talk about it from the Orange County market, which
Mm-hmm.
is $1 million plus median income.
Mm-hmm.
And you can also talk about it from more rural areas.
Yep.
What's the property valuations in where you are normally?
I would say more like 600,000 is more
About
than
600.
median.
So you're about 40% lower.
Mm-hmm.
And are you still seeing the same perceptions?
Mm-hmm. Absolutely.
So it's no different when you're looking at the value of the property.
No.
It's just that they might say, okay, I think my house is worth 675 instead of 600.
Mm-hmm.
And here in Orange County, they might say it's worth 1.7 instead of 1.5.
Yes.
Same difference, just the numbers.
Just different numbers.
Interesting. So do you want to get a real valuation of your property? If you do, give me a call, 800-306-1990. All I need, I'll tell you what your equity position is. If you send us a copy of your mortgage statement, and I don't care, redact whatever you want to. The idea here is if you send us a copy of your mortgage statement, rj@ronsiegelradio.com, we'll give you an idea of what that property is really worth. And that way, if you want to take some action of some sort, you can take that action based on real information, real education. And again, I have no vested interest. If you sell or don't sell, yes, I have a real estate license. No, I'm not. I'm kind of like your best friend's dog walker's mother who got a license and has never used it. I'm in the same boat. I've got a license. I'm not qualified to sell real estate. I put you in touch with professionals like Mary who are qualified. But I can still give you the information that you need. And remember when you go online and you get bad information like you get from Zillow or some of the other sources, they're looking backwards. You have to talk to a real estate professional if you want to look forward because they know how many homes for sale on your street. And are they been there for a while? Have they not been there for a while? What's the condition compared to yours? That's what you need a professional real estate agent for. If you want that information, again, give me a call, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.